Hi, I'm Steve Dudash, IHT Wealth Management. Welcome to this week's Wealthcast. We're going to do some financial planning this week. It's tax time. I'm starting to hear this question come up a lot right about now. So if you are over 70 years old and you have IRAs or retirement accounts and you're starting to take those required minimum distributions where the government's basically forcing you to take money out of your retirement plans and put them in your bank accounts. Well, you can put them in your bank accounts and earn 1% or whatever, but if it's money that you're not necessarily needing or counting on, or in a lot of cases just don't have any use for, there's not a lot of advantage throwing in your bank account earning nothing on that. So I wanted to roll through a couple options you could do. I'll say this in advance. Obviously, you got to clear everything with your accountant when it comes to taxation of certain things, and none of these are perfect for everyone. These are just things to get your mind going and see if it applies to you. One, the easiest. You could always gift it to your heirs, whoever you are going to give the money to when you pass away anyway. Say it's a $10,000 required minimum distribution. You take it out of your IRA and you give it to your child or whoever is going to inherit your money. They get to use it during their lifetime as opposed to you having it sit in your bank account, and it may help with your estate taxes down the road. That's an option. Second one, charities. You could take the $10,000 in that same example, give it to a charity, and if done the right way, and everyone's taxes are different, you can get a write-off. So instead of paying income tax on that $10,000 and sitting in your bank account, you could deduct some or hopefully all of it. Another route, which is a little more advanced, is you could take the same 10 grand distribution and you could buy a life insurance policy. Now this isn't right for everyone, but you take the $10,000, you buy a life insurance policy, now you got a $100,000 death benefit. You pass away some point down the road, and it goes to your heirs as 100 grand instead of 10 grand. Again, it's an option for some people. And then finally, combining some of them is you can buy a life insurance policy, again, that same $10,000, but make the charity the donor or the recipient. So instead of a $10,000 donation to a charity, you buy a life insurance policy, and now you got a $100,000 donation, again, roughly speaking, to whatever charity that you want, you pass away down the road. And if you do that the right way, often you can get tax deductibility on that way as well. So none of these are perfect for everyone, but I just wanted you guys to hear something different because I get these questions a lot this time of year, and too often people just let it sit in their bank account and they don't really need it or want it there. So just wanted you to think about other things that might apply to you. Call us, email if you have any questions, you want to talk about this in more detail. And aside from that, have a nice weekend. We'll talk down the road. Bye.